Now let's have a bigger. The way I love to analyze the market is very simple. Number one, I do is for clarity, understanding what the market is doing. Any pair I open, anything I come across first, what I normally do is to understand it from the higher time frame perspective. If I get it on the higher time frame perspective, then I have a direction already. But if I don't have it, if I don't have the direction on the higher time frame, it's very difficult for me to be able to predict the market, to take advantage of the market. So we come on the higher time frame. For example, now let's look at the weekly time frame of gold. Then you now look at what has gold been doing. You see? Now, hope you are seeing something. You are seeing something. That gold has been what? Has been in an uptrend. Higher highs, higher low, higher highs, higher low, higher highs, higher low, higher. It has already made another high. So your mind should tell you now that what? Gold is bullish at the moment. All I should be engaging, all I should be thinking is to buy. All I should be thinking is to look for a buying opportunity on gold. But one thing you have to know is gold is very volatile. Number one is what? Have a clear direction on the market. Know where the market is going. All the strategy, everything I'll be teaching, the different concepts I'll be teaching, is all anchored on direction. If the direction is not clear from the higher time frame, those strategies will not work effectively. Now, if you look at the weekly time frame, we've seen the market is making what? Higher highs, higher low, higher highs, higher low, higher high, and higher low. You see the market is what? Is going up. So when the market is the direction is very clear, it is easy for you to predict and to trade. Now, what the next thing we have to do? The next thing we have to do is to go to a lower time frame. Now, let's look at the daily time frame also. Let's look at the daily time frame. Now, you see that on the daily time frame, you have something here. Now, let me explain something. Now, whenever the market is moving, is bullish or is going in a particular direction, is trending on the, let me just say that it's trending on the higher time frame. There is a point the market will get to, it will consolidate a bit, to gain enough momentum. That is what happened on gold here. Now this market was ranging around this place, consolidating, despite it was what? Bullish. It was consolidating and building up momentum. So all you just have to do is to, number one, look at, just find a way that the market will, just find something that will tell you, okay, this market is still is about to go up again. It's still going to the upside. What happened here is what? The market was consolidating. It was building up momentum. Momentum build up. It came here, it came down. Came here, came down. And then what happened now? It breakout. This is the breakout strategy. So everything I'm going to be talking about today is what? Breakout strategy. How to use the breakout strategy. Number one thing, the best way to use the breakout strategy, know this, number one is what? Is to know the trend of the market. Once the market is trending in a particular direction, so the way, like, you should have this in your mind that, okay, since the market is going in this direction, the place I should be expecting the breakout should be in line with the trend, the overall trend. So assuming this market broke, okay, for example, now we have this. Another trend formation here, right? So you can see it. Assuming this market now broke out of this particular place, instead of going up, instead of breaking up to the upside, it broke to the downside. I'll ask myself, what is it about to do? But I should have it in my mind that what the overall we are bullish on gold. You now wait and find out. But since you know that, okay, the market is bullish and it has given you a bullish breakout, it will give you some level of confidence that yet you are still in line. Things are still going well. The market broke to the upside, and when the market broke to the upside, what happened? See momentum, bullish momentum, green, bullish momentum building to the upside. Bullish momentum came into the market. But all this while it was consolidating. Now, since the market has broken out, what can you do? How will you take advantage of it? That is the problem of so many persons. They can do the projection in the higher time frame, but to execute on the lower time frame is a big problem. The market, okay, some persons say, okay, BTC is going up to this 120k. This, they'll just tell you the projection, but where can they take advantage of it? GBP/USD is going to go 400 pips, 500 pips, but how can they take advantage of it? It's a big problem. So, but today I want to teach you something. That when you've identified that the market is going in this direction, how can I take advantage of it? Where can I put my small money into it? How can I be able to enter the market with small risks. Because if you enter around this place now, you are risking much, and this is good, except you're a swing trader. But for a day trader, all you just have to do is to come to a lower time frame. For example, now we have what we've known. Okay, this market is forming. This is what a daily time frame. A sharp pattern formed the daily time frame is breaking out, right? Now let's go to the 1 hour. Let's go to the lower time frame to see things more properly. But now you have assumed in your mind, you've known it in your mind that what this market is going to the upside. It has broken to the upside. So it's building. It's like the way the market is going now is going to go up. It's going to go up. So your mind should not be telling you to start selling again. I want to sell. I want to. If you are still selling this market, maybe the market market is going up. You want to sell. The market is bullish. You want to still sell. You'll be hitting stop loss. Now let's go to lower time frame so that we can be able to catch nice trading opportunity. Where did we break out from? Yeah, we broke out from here, and then the market was started going up, right? Started going up. Now there are many entry strategies, but I just want to teach us this one. When the market broke out from here, some persons can enter around this place here. There's a concept to enter around this place here. Some persons can enter around this place here. Some persons can enter around this place here. But the one I want to point out for us to clearly understand is what breakout entry strategy. Breakout entry strategy. Now, when this market was going up, let's have a trend here. We have a trend here, right? We have a trend. Yeah. This on the 15 minutes time. You can see this type of trend. Intraday trend. You can see this type of, okay, it's forming already. Higher highs, higher low, higher highs, higher low. You see the market is trend, like it's going to the upside. You understand the trend already. So what are you supposed to do? We have one touch of the trend line, second touch of the trend line. Now the third, the fourth touch of the trend line. Sometimes the way I love to trade is this. I love the market to give me some level of consolidation before breaking out. That consolidation will give the market momentum to push to the upside. When the market is breathing sometimes, I will love it because it's trying to gather momentum, trying to gather energy to pump. Let me not say to pump, to go to the upside. So we have first touch, second touch, third touch. Some person, okay, the market is gold is going up, but you have not gotten a decent entry. How can you catch up with a decent entry? Number one, the trend is already set. You have a trend, right? Number two is to wait for breakouts. Let the market consolidate a bit. Let me delete this one. You see the market consolidated around this, consolidated here, and then it broke out. Now immediately the market broke out. What are you expected to do? Let me make it more clearer. We see it now. Broke out, touched the trend line, and what happened here? Broke out. Now when this market broke out, if you can catch this I think this might be as a result of a powerful news. Okay, this is 15 minutes time frame. On the 5 minutes time frame, you might get a 5 minutes candle closure here that your stop loss will come around this place. Your stop loss will come out below the recent low. Then your take profits should be high. Yeah. So you might get an entry around this region. The touch of the trend line, it broke out. But nevertheless, if you can just minimize your risks, you can just enter around this place here. Then your stop loss will come here below this, and then your reward would be high. That is one entry strategy. The market, but you have known it in your mind that the market is what overall it is bullish, and then you now have you now have something that formed like a consolidation on the daily time frame that broke out, give you more momentum to the market. You've entered around this place now. The market, you see how it's going up. Second entry again is this. Another trend line breakout is still here, but we have what we have a support here, a demand zone. We have it here. Then it still happened again. breakout. You see now, the market broke out of this place, started going up. So the way I love to sometimes this counter trend line, sometimes it gets you rid of false entries, false signals. So if you think, okay, sometimes a person can buy here, okay, the market is now at what at support, we buy, the market will come down. But all of since you've seen that, okay, clearly now the market is what, it's ready, it's gaining momentum to the upside, and it has broken this counter trend line. What are you supposed to do? You buy. You have more confidence. Okay, this market is going like, even though sometimes the risks, the risks, the stop loss might be very big. Sometimes it might be. All you just have to do is to reduce your risks, the amount you are entering. You understand? So that you can be able to catch up with the market. But you buy, your stop loss comes around this region, and then you enter. This trade happened on Monday. Yes, it was Monday. It happened on Monday, and then the market went to the upside. So that is how it's done. We also have another one here again. We have this. We have this. But I think we have this. Let's have this. We have this. Came here, came down. You see, when the market came here, what happened? It was trying to go up. But was there any counter trend line? Was there any breakout here? No breakout. So a person, okay, I buy. Some persons can say, okay, I buy at support. When the market comes support, they buy from here to here. They enter around this place. They will likely close out around this place. But the market was still coming down. That's one thing. But whenever the market is bullish, you have to be very careful of your entry. It can give you false signals. You are not very careful. Now, well, the market came here, broke down. It was doing as if it was going up again, still came down. Whenever you see that, okay, you try to buy at a particular place, the market went up, still came back against your stop loss, move your support back to your around the region you put your stop loss before, like this region now. The market, your support should come to this place before you enter again. What happened? The market now came to this point again, did not break lower, but you have seen something here. There's a touch here, another touch here, but you can see something here. You can see this. You see this. You see this. It broke out, started what? Going to the upside. Going to the upside. Before it came again. Even when it came down to this place. You see, even when the market came down to this place, still formed the same thing. Counter trend line. And also we have what? Another breakout. This was a breakout. One. You also have, I'll teach this one in the next video. When the market broke out, what happened here? It came here, broke. I think it was a result of a news. Come here. Stop loss should come around this place. Your entry should be here, and then your first target should be around. Your take profit should be around this place. So that is that for today. I think you've learned something. One thing is what? Let's recap again. One thing is to know the trend. Know the trend. Once you've known the higher time frame trend, market is bullish. Gold will still keep going up. See, so don't be having the mindset of selling gold. You are putting yourself on the wrong side. Come to the daily time frame. We have a consolidation here, broke out, giving rise to more bullish market condition. The market is still bullish at this particular moment, still going up. So that is that for that. And then come to the lower time frame and have your entry. Normally you should have understanding of what? Of support. Have understanding of support. Have a good understanding of support. This will help you a lot. So that when you know, okay, the market is, if the market is going up, you are not to buy when the market is exhausted. Market is going to wait for it to come down, touch a base. When it touches a base, you now start thinking, okay, I think I can still buy this to the upside for more bullish, and the market is still going to the upside. So you buy at support. Wait for the market to move to the upside. That's how you trade. That is how it's being done. So I wish you success as you use this strategy But number one, know that the market is trending. If the market is not trending, most of these strategies will not work. Have a proper direction of the market from the higher time frame. If the market is consolidating, some of these strategies will not work. It's not that they don't work; they will not work to their optimum, to their best performance. That's just how it is. So the next video, I'll be talking about how to properly use the chart pattern called, but oh my god, how to properly use the chart pattern, double top and double bottom.